Ever feel like choosing a brokerage is like trying to pick a favorite flavor of ice cream when they all sound delicious? You've heard the names, M1 Finance, Fidelity, and Vanguard. They're all giants in the investment world, but which one is truly the best fit for your financial journey? Setting the stage, who are these players? Let's quickly set the scene. Think of these three as representing different eras and philosophies of investing. Vanguard, founded by the legendary John Bogle, is the granddaddy of low-cost index fund investing. Their unique corporate structure, owned by their funds, means they are relentlessly focused on driving down expense ratios for their clients. If you're all about passive, long-term, set-it-and-forget-it investing, Vanguard is your classic choice. Fidelity is the powerhouse, a massive, full-service brokerage that offers everything from trading to advice to credit cards. They're the all-in-one financial supermarket. They cater to day traders, passive investors, active stock pickers, and everything in between. They truly have something for everyone. Then you have M1 Finance, the newcomer, born in the digital age. M1's genius is in its automation and its visually driven, pie-based approach to building a portfolio. They bridge the gap between self-directed stock picking and automated robo-advising. Core differences: the investment philosophy. The real difference lies in how they let you invest. With Vanguard and Fidelity, you're primarily dealing with traditional accounts. You buy shares or mutual funds, and you manually rebalance them. They offer great mobile apps, phenomenal research tools, and $0 commissions on stocks and ETFs. Fidelity often beats Vanguard on its sheer range of services, trading tools, and its own lineup of $0 expense ratio index funds. If you want maximum control and choice, these two are the top tier. M1 Finance is where things get interesting. You don't buy individual shares, you build a pie, which is your ideal portfolio mix. You allocate percentages, say 50% to an S&P 500 ETF, 30% to a growth stock, and 20% to bonds. M1 automatically buys and sells to maintain those target percentages. It automatically rebalances for you. This makes it an absolute winner for the set-it-and-forget-it investor who values automation and visual simplicity above all else. They also offer lending and a great checking account experience. Who should choose which? So, let's break down the perfect user for each. Choose Vanguard if you are a pure index fund investor focused on the lowest possible fees, and you don't need fancy trading tools or active management features. You value the legacy and stability of the industry pioneer. Choose Fidelity if you want a full-service, all-in-one platform. You might invest passively and actively trade stocks. You want excellent research, retirement planning tools, and perhaps a branch office nearby. You value power and breadth of features. Choose M1 Finance if you are a modern, long-term investor who wants the benefits of a custom portfolio with the automation of a robo-advisor. You love the idea of building a visual pie and having all contributions and dividends automatically rebalanced for you. There is no single winner. Your choice comes down to your investing style. Do you crave control and deep research? Go with Fidelity. Do you want rock-solid, low-cost passive investing? Vanguard is your home. Do you want to